Gold, the ultimate safe haven when the economy trembles, uncertainty looms, and inflation eats away at your dollars. But what if I told you that not all gold investments are created equal? That choosing the wrong gold ETF could quietly drain your wealth in 2025? Stay with me, because the answer might surprise you. For centuries, gold has been the bedrock of financial security. And today, for 18 to 30-year-olds like you, living in an economy that feels like it's on the edge of a cliff every week, gold ETFs are a modern, hassle-free way to tap into this ancient asset. But here's the kicker. Picking the right ETF is the difference between smart investing and spinning your wheels. So, let's uncover the top gold ETF you need to watch in 2025. Quick question. Ever feel like some investments are just trendy buzzwords? Gold ETFs aren't one of them. But think again if you're thinking about blindly picking the one with the shiniest name. The exploration. Why gold ETFs matter in 2025. 2025 is shaping up to be a pivotal year. With inflation rates projected to remain unpredictable and global tensions likely to ripple across markets, gold will anchor stability. Gold ETFs are the accessible, liquid way to own gold without the hassle of storing physical bullion. But let's pause for a moment. Ever wonder why they're so popular among investors in their 20s and 30s? It's simple. They're cost-efficient, easy to trade, and a hedge against uncertainty. Now, here's where things get tricky. Not all ETFs are created equal. Some have low expense ratios but compromise on returns. Others track gold prices accurately but lack liquidity. And then there's one ETF that strikes the perfect balance, but we'll get to that in a moment. Before we dive into the top contender, let's talk about the elephant in the room: hidden costs in gold ETFs. Could your safe investment cost you money? Let's explore what to look for in a gold ETF. When evaluating gold ETFs, keep your eye on 3 key factors: expense ratios, tracking accuracy, and liquidity. Here's why they matter. Expense ratios are like the slow leaks in a boat. They don't sink you immediately, but over time, they could leave you far behind your goals. Tracking accuracy ensures that your ETF reflects the true value of gold, not some watered-down version. And liquidity? That's your get-out-of-jail-free card if markets take a nosedive. Let me put this into perspective. Choosing the wrong ETF is like picking a sports car with a bad engine. It may look good, but it won't get you far. So, which ETF checks all these boxes? Let's reveal it in just a moment. But first, let's talk about a mistake most people make with gold ETFs and how you can avoid it. Avoiding common pitfalls. Here's a rookie mistake: chasing returns. Many first-time investors pick gold ETFs with the highest short-term gains, only to find themselves trapped by high fees or poor performance during downturns. Remember, the best ETF is the one that performs steadily, not spectacularly. Investing isn't a sprint, it's a marathon. Speaking of marathons, did you know Usain Bolt only runs for 9 seconds at a time? Investing in gold ETFs, thankfully, doesn't require you to be that fast, but it does require smart choices. Their payoff. The top gold ETF for 2025. Drumroll please. The top gold ETF to watch in 2025 is insert ETF name. Why? Because it strikes the perfect balance between low expense ratios, high tracking accuracy, and robust liquidity. It's designed to weather the storm of inflation and market volatility, making it an excellent choice for anyone looking to grow their portfolio steadily and securely. But here's the thing, investing in gold ETFs is just one piece of the puzzle. To truly master the game of wealth, you need to learn how to navigate the stock market like a pro. Lucky for you, I've got the perfect next step. Click on this video here. Don't miss it. It's a game changer.